Well, Doug Code is pretty optimistic about the outlook for the U.S. stock market, and he's predicting the S&P 500 index will reach 2020 in the new year. He's chief market strategist of ING Investment Management. Doug, welcome to the program and happy Thanksgiving. So tell us why you think that what's going to drive the markets in the new year.
Well, the broadening of the global economic expansion, I think, is going to go from a U.S.-centric only. It's going to broaden not only to the other developed markets, but also to the emerging markets and the frontier markets. And I think that's very underappreciated. If you look at the trends over the past decade, the global economy has doubled over that time period.
You know, Doug, we're already up 33% or thereabouts on NASDAQ this year, 27% for the S&P. That's going to be, if it closed at this level, the best year since 1997 for the S&P, about 25% for the Dow. Can it keep going? I mean, that's just getting up there.
Well, if you look at it, it's been driven by all-time record profits in 2013. And my forecast for 2014 is more record profits. So it's fundamentally based. And I think the earnings growth can continue to propel this market forward. And if you look at it, it's still cheap. It's at a 14.8 next year earnings. That still has compelling value. And I think that investors are starting to capitulate to get into this market, and I think it'll further drive this market forward.
Well, I don't need to tell you, but one of the worries for many investors is, you know, what's it going to be like once the Federal Reserve begins reducing the stimulus, that taper talk. And so do you think that the Fed tapering will work for or against investors in the new year?
I believe its time has come to start tapering back, that it's excessive, it's unconventional monetary policy. The economy is actually in fairly good shape. We're at record high GDP, record high retail sales, as your previous report went on, and it's time to remove that. I think it's already discounted in the market, and I think what it is shows you that we're getting back to normal and that we don't need the Fed excessive stimulus. So I think it's all good news.
Where could I eke out a little extra alpha, as they say on Wall Street? Is it emerging markets? Is it mid caps? Is it small caps? What?
Well, I think you want to come down the risk curve. That is getting into mid caps. You talked about that. And because of this global economic expansion, we like pretty much anything global. So emerging markets, frontier markets, global REITs as well, I think, is an attractive place. If we're in an inflation environment down the road, then REITs can really adjust their rents to almost as an inflation hedge.
Doug, we have half a minute. Tell us quickly sectors that you think will do well. I know you can't name specific stocks.
Well, I like consumer discretionary because they've been supported by the Fed stimulus, and it's helped housing, it's helped the markets. As a matter of fact, with the wealth effect, consumer wealth is at an all-time record high. I like technology, in particular small cap technology, software and services, and industrials and machinery. I think because of the global economic expansion, that is going to be, the earnings growth certainly will be there. So it's a good fundamental place to be.
Okay, terrific. Thanks so much for coming on the program.
Welcome.
Doug Code, Chief Market Strategist of ING Investment Management.